Hello and welcome. It's James from Trading Coders here, and today we're going to talk about the Trading Coders Auto-Optimizing Indicators. Now, what are they? Well, let's talk about indicators first. An indicator indicates something. Usually that means drawing wiggly lines on the chart, such as in the case of this MACD. It's got two wiggly lines, in fact, and a diff, which is actually the difference between these two wiggly lines, going above and below zero. Now, indicators give you an indication of price movement or some kind of measurement that inform you about perhaps making a trading decision. Now, this is different from a strategy, which actually contains the entry and the exit and all of the trade management involved in between, such as profit targets and stop losses. An indicator, which we're going to talk about today, gives you a signal, might set up in a certain way. Now, we might say, well, it looks pretty good to take a long entry when these lines cross zero. Actually, that green line is the MACD line itself. So let's say we go long when it goes above zero. And that looks like a good idea right now. But actually, is that a good idea? Well, we don't know. We're just looking at this little bit and saying, well, that looks good. But further back in the chart, it might be doing, wiggle, 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 and we would just get chopped to death and lose money in those scenarios. So, how can we know if this is a good idea? And what are the best settings to use? The default settings for a MACD are 12 for a fast, 26 for a slow, and 9 for smooth. They've been the traditional settings ever since whoever it was invented the thing. And everyone uses those settings as their default settings. But are they the best settings? Is that even a good signal? How do we know? Well, wouldn't it be nice if the indicator could tell us? Well, that's exactly what the Trading Coders Auto-Optimizing Indicators can do. They can tell us. Let's go into this indicator's parameters and configure one of the signals that it has programmed in it. In this case, I'm going to choose number 4, MACD cross zero, which is the one we just talked about. Now, a new display occurs, edge ratio equals 1.01. Now, what does that mean? What's an edge ratio? An edge ratio is the ratio of max favorable excursion compared to max adverse excursion. So let's say we had an entry here to go long. Well, price moves against us. That's adverse. And the worst it got was there. Then it went in our favor for this signal. And it got to there. That's the max favorable excursion. And it ended up here. Let's say that took 10 bars. So it's the ratio of the favorable excursion over the adverse excursion. In this case, that looks pretty good. This movement in our favor was much bigger than the adverse excursion. Now, how you trade this is a different matter. We're just looking at, is this a good signal going long? The idea with edge ratio is that you measure this over a number of signals. Let's say the last 20 signals or 50 signals over 5 to 10 bars, and find out if the signal is any good by getting a nice high edge ratio, more favorable excursion than adverse excursion. An edge ratio of 1 means that there was an exact amount forward positive to adverse back. So you want a number larger than 1. 1 is basically a coin toss. And dear oh dear, 1.01 means that this signal on the MACD is a coin toss. It goes backwards and forwards just as much. So that would be very difficult to trade and make money. So now we're going to have the indicator auto-optimize. That is, it's going to figure out the best settings. So we'll go into the parameters and we will enable the auto-optimizing. I'm going to optimize it over the last 50 days. And we'll talk about re-optimization a bit later. Exit type after 5 bars. We'll measure the price movement for 5 bars after the signal. There's a bunch of settings which you'll be familiar with if you've ever used the strategy analyzer. You set the min and the max and the step. We'll get into that later too. Now, let's set it going. Over here, you'll see a progress and the best value it's found to date. And look at that. It's got to 2. So that means it's reconfigured the parameters to be twice as much favorable excursion as there is adverse excursion over 50 days. 50 days of 1 hour bars. So that's pretty good. Let's see if we can do better. Let's measure the last 20 signals. Re-optimizers, going through over 2,000 variations. Hey, now we've got an edge ratio of over 3. So the last 20 signals, and you can see them here on the chart, have an edge ratio of 3 to 1. So price moved in your favor of the signal 3 times more than it moved against you. Now that's beginning to smell like you could actually trade that profitably. Now how you trade it is up to you. Where your target is, what your exit is, what your stop loss is. That's a strategy and trade management discussion. But every trade starts with a signal, a setup, why you're getting into the trade. Is it a good idea? Well, the auto-optimizing indicators can tell you. Let's look at another of the auto-optimizing indicators now, the stochastic. And I've configured a signal here for when the average, that's the blue line, leaves overbought and oversold. So up here it's all overbought, very strongly trending, and then it leaves and hopefully goes downwards. And here's the oversold area, and when it leaves that, well, maybe it's going to come back. Now that's a good one there, a good example. So the overbought and oversold conditions are key to the stochastic, and you can see it actually isn't a really great idea with default settings. 1.16. Well, that's not much better than a coin toss, and certainly not exciting to trade. So let's get this indicator to auto-optimize and tell us what it thinks we should be doing. So let's measure the last 20 signals, exit after 5 bars, and see what happens. And hey presto, we've got an edge ratio of 3 1/3 basically. That's a really good score, and it's chosen to have crosses. This is one of the signals. So the stochastic fast cross, the K crosses the D line. And for the last 20 signals, that's been a really good idea. I'll show you some other settings in here. You can configure the optimization interval. So that's the last how many signals, or how many days, or how many bars. Bars and days are fairly similar in concept, but the last signals is a really interesting one because that is independent of time. Doesn't matter when the signals were taken. I just want to know how the last 5 signals, 20 signals, whatever, did, whether that was all today or took 2 weeks. Re-optimization interval will say after 10 signals with this setting, it will re-optimize for you. So it re-optimizes as time goes along without you having to do anything. So let's say you're trading bars. For the last 200 bars, I want to optimize over the last 500 bars. But I want to do that every 10 bars. So during the day, every 10th bar, it will re-optimize and give you those signals. Now the exit parameter is either after 5 bars or next pivot point. Now what's a next pivot point? Well, basically that's a swing, a high swing or a low swing. So if you've got a long signal, let's say here, I'll just move that out of the way, let's say somewhere in here, it would measure until the next high swing and figure out what that favorable excursion was compared to how much pain it took on the way. So this is a way of measuring runners, not for just a defined number of bars shortly after the signal, but in the long run. Now this is a pretty interesting setting. It can produce some pretty amazing results. So let's set it going and see what happens. Well, that has found an edge ratio over 13. So that's amazing. This signal is the exit overbought oversold signal. And look what it's found. 13 times favorable excursion compared to pain. That's amazing. That's just wow. Let's look at another of the auto-optimizing indicators now, the RSI. And this is set up showing us a divergence signal. When there is a divergence between RSI and price. It's not doing very well, is it? 0.83. So that's having price move against us more than it's moving in our favor. Now, people can be fans of divergence setups, but this is telling us it's not a great idea on this chart. This is oil on a 4,000 tick chart. So let's set the indicator loose to auto-optimize and find out what it can do for us. Let's look at the last 20 signals over 5 bars. $1.72. Well, it's okay. It's better than 0.83, but it's not fabulous. So maybe the RSI on this chart isn't a great idea. Now that's a really good thing to know, because we can move on. Instead of getting stuck in this, looking at RSI on a 4,000 tick oil chart and wondering if it's a good idea. Now we know it's not particularly a great idea. Let's try a different chart. GBP USD Forex 20 range chart. Let's see what the auto-optimizing RSI can do on this. So same settings, last 20 signals, and we'll set it going. Well, 2.61, that's much better. So over 2.5 times more favorable excursion than adverse excursion over the last 20 signals, and you can see them here at the little triangles. Now a couple of other things I'd like to point out. This little yellow line shows you when it optimized. So if you've got it set to re-optimize, say every 3 signals or every 20 bars, it will move that line to the latest optimization point, so you know when it last optimized. Now I'll talk you through some of the other settings. Show recorded real-time plots will leave a faint grey plot or plots of the indicator and the signals that have happened in real time with a certain optimization, so that when it re-optimizes and draws all of the indicator again, you don't lose what's happened, and you can see, if you were trading, why you took the trade you did at the time, 30 minutes ago or whatever. Now these are how you configure the optimization. You've got the minimum value it will test, the maximum value it will test, and the steps it takes to get there. So 5 to 20, stepping 2 will go 5, 7, 9, 10, 5, 7, 9, 11, 13, 15, 17, 19, and it'll stop at 20. Now, don't get too ambitious with this, because it increases the testing time, increases the CPU time and memory requirements significantly. But by all means, muck around with it. Signal type 1 to 5 corresponds to this, 1 to 5. Enter overbought oversold, exit overbought oversold, a crossing of the lines inside overbought oversold, across any time, except when it's overbought or oversold against the cross, and divergence signal. You can use the auto-optimizing indicators on any type of chart. Here's Starbucks, an equity, on daily charts, showing us the edge ratio of the last 10 signals was 4.22, so 4 times the favorable excursion compared to the pain you took over 5 bars. So that feels like you might be able to trade that profitably. 4 times the price movement in your direction compared to against you. Do you think that that sounds like a good idea? Well, it sounds like a good idea to me. How you manage the trade, of course, is up to you. But knowing this feels like an advantage to me. All the best with your trading, and cheerio.